Hey everyone, welcome back to Corporate Decoder. Today, TFC just filed its 8K announcing first quarter 2026 results, and I am looking at how these numbers stack up. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting its earnings and will break down what those numbers really mean for investors. We are looking at a current report filed by Truist Financial Corporation, known by its ticker symbol TFC. This filing comes out on the 17th of April 2026, and it is all about their financial performance for the first quarter of 2026. These reports are crucial because they give us a direct look at how the company is doing straight from the source. It is like getting an inside peek at their wallet and their plans. Before we dive into the numbers, let's quickly recap what TFC does. They are a major financial services company, and their stock is traded on the New York Stock Exchange. You'll see their common stock listed there, but they also have several types of preferred stock, which are like a special kind of stock that often pays a fixed dividend. There is Series I, Series J, Series O, and Series R preferred stock, each with its own details and ticker symbols like TFC-PI, TFC-PJ, TFC-PO, and TFC-PR. These are important for understanding their capital structure. Now, the main event of this filing is announcing their first quarter 2026 results. Truist Financial Corporation, or Truist as they are commonly known, released their earnings report and other financial materials on the 17th of April 2026. These documents are key for investors to understand the company's financial health and future outlook. They also included forward-looking statements, which are essentially predictions about the future, but they came with a crucial warning. These statements mention factors that could make the actual results very different from what they anticipate. This is standard practice, but it is always important to remember that the future is uncertain. Now, this is an important detail for how we interpret this filing. The actual earnings release, which is Exhibit 99.1, and the quarterly performance summary, Exhibit 99.2, are being officially filed. With the SEC, this gives them a certain level of legal weight. Interestingly, a specific quote under the CEO commentary section of the earnings release and the entire earnings release presentation, Exhibit 99.3, are being furnished, not filed. Furnished means they are provided for information but don't carry the same legal implications as filed documents. This is a subtle but important distinction in SEC filings. It tells us what information is considered official versus supplemental. So, what are the actual numbers? The earnings release is where we find the core financial results. While this specific 8K filing doesn't contain the detailed financial tables themselves, it directs us to these exhibits. We need to look at Exhibit 99.1, the earnings release, and Exhibit 99.2, the quarterly performance summary, to see the actual performance metrics. These documents would typically reveal key figures like revenue, net income, earnings per S-share, and details about their various financial instruments. Let's imagine we are looking at those exhibits. For a bank like Truist, we'd be paying close attention to their net interest income, which is the difference between what they earn on loans and pay on deposits. We'd also want to see their non-interest income, which includes fees from services like wealth management or investment banking. Another critical area is their provision for credit losses. This is essentially an estimate of how much money they might lose from loans that go bad. A rising provision for credit losses can be a warning sign that the economy is weakening or that the bank's loan portfolio quality is deteriorating. We would also look at their efficiency ratio, which measures how much it costs them to generate a dollar of revenue. A lower efficiency ratio is generally better, indicating more operational efficiency for preferred stocks. Especially the perpetual ones listed, we'd be looking for any information about dividend payments or potential redemptions. The context here is that Truist has a significant amount of preferred stock outstanding, and any changes or calls for redemption can impact their capital structure and profitability. For example, if they were to redeem a higher cost preferred stock and replace it with lower cost debt, that could be a positive for common shareholders. Looking at the structure of Truist preferred stock is quite telling. For instance, the Series J preferred stock has a fixed rate of 5.853% that then floats. This means that after a certain period, the dividend rate on this particular preferred stock will adjust based on market interest rates. This is important because it can lead to higher dividend payments for the company if interest rates go up or lower payments if rates go down. It is a way for the company to manage its interest rate risk. Another interesting point is the Series R preferred stock. This is described as non-cumulative perpetual preferred stock. Non-cumulative means that if the company misses a dividend payment one quarter, it doesn't have to make up for that missed payment in the future. Perpetual means it has no maturity date. This type of security is very equity. liken its characteristics favored by regulators for capital purposes, but can be less attractive to income investors if dividends are cut. It is also worth noting that Truist has indicated they are not an emerging growth company. This is significant because emerging growth companies are allowed certain flexibilities in financial reporting, like longer periods to comply with new accounting standards. By not being an emerging growth company, Truist is subject to the full, more rigorous reporting requirements. Finally, the report is signed by Cynthia B. Powell, who is the Executive Vice President and Corporate Controller, and identified as the Principal Accounting Officer. This signature signifies that the company, through its authorized officers, has reviewed and approved the contents of this filing. Now, looking at the bigger picture for Truist. They are a major regional bank, and their performance is tied to the overall economic health of the areas they serve. The reported first quarter results will give us a snapshot of how they are navigating the current interest rate environment and any potential economic headwinds. Given that the P/E ratio is around 4.2, it suggests the market might be undervaluing the stock relative to its earnings, or it could signal underlying concerns about future growth. With 37,000 employees, Truist is a large operation, and managing that workforce effectively while adapting to financial market changes is always a challenge. The recent news about preferred stock redemptions, like the Series P, indicates proactive capital management, which is generally a positive sign for optimizing their cost of capital. The risk I am watching is how effectively Truist can manage its net interest margin in a potentially volatile interest rate environment. My biggest concern is whether any economic slowdown could impact their credit portfolio more than currently anticipated. What I am actually looking for is evidence of consistent earnings growth and a stable or improving efficiency ratio. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.